feel like this week is going to be awesome. I do. Like, the COVID stuff is terrible, but in mortgage land, rates are actually great again. They're fantastic again. Yay! Everybody come refi. Call me. So the Fed announced that they're going to be buying mortgage-backed securities. The key word in this announcement is unlimited. Yes. So last week, we were really seeing a lot of fear in the market about, well, who's going to buy this? Who's going to buy these mortgage-backed securities? And that's why you saw rates jump. Like the most they've jumped since 2016. Seriously, the most they've jumped since 2016. It was because there was a fear about who the end buyer was. Well, thank you, Fed, for letting us know that you will be the end buyer, because that has taken a tremendous amount of strain off of lenders and uncertainty. And so we're starting to see great rates again. Now, in this video, I just want to talk to you about a couple things that I'm noticing with refinances. Now, with purchases, you really want to make sure you're dialed in with your lender, because the way that they're handling all of this is very different with COVID. So purchases, guys, you want to get dialed in. Same with refinances. But let's focus on refinance, because that's what everyone's home. They're not, they're working from home, so they're calling us. So I just want to give you guys my top tips, because I don't want you to think I'm super rude, but let's get honest. We're going to get honest. Okay. So number one, you want to get structured and ready to go so that when we have great rate days like today, we can lock you. It is that simple. So for instance, I had a bunch of people call me over the last 2 weeks. We have them all structured across the country, and we started locking today. Lock, hitting rates. And it's a great place to be for them, because they're going to save a couple $100. It's a great place for us because we know we're taking care of our clients. It is good all around. Now, where it's not fun, right, is that after I lock, or I see where everyone is, because everyone has different targets and different needs based on where they are. That's when I get to the people who are like, well, call me if you hit XYZ. Okay, so keep in mind that the market's been incredibly volatile. So last week I went from quoting down here to up here. So if you're one of those people that's telling a lender, oh, well, just call me if you hit something, you're going to not be a priority. You're going to be, after we take care of everyone who's ready to go, then we're going to call you. And that could lead to you missing the boat. So I always stress with people, like, figure out what lender you like, who you think has your best interest. Now, some people go, oh, well, it's the lowest rate. Kind of. I mean, it maybe, but it also depends on if the person can actually get you the rate. There's one lender who we always call worst mortgage, because we think we're funny. And they're really good at locking people at good rates. Too bad they don't close a lot of them. I mean, we end up with the client a couple months later going, oh, they couldn't close me. And we're like, yeah, because they don't know how to structure loans, right? So you want to make sure that the person that you're working with knows what they're doing and can actually deliver on what they're saying. Also, there's strategy to this, right? Like the people we locked today, we didn't lock last week, because we were waiting for it to make financial sense for them. And that's what we do. We do math. Yes, we do math. Yes, to let you know that yes, it does make sense to refinance, because refinancing just to refinance, it's the biggest waste of money in the world. It is how to strip equity from your home. It's the worst. My sister is also a loan originator, and we're always talking about it, because we will tell people, yeah, no, I get that you want to refinance and you want to do it this way, but it doesn't make mathematical sense. I can't do it. I can't do it. No, I am not going to lower your rate 0.25% for 4 points. That makes no sense. No sense. Maybe in 1% of people's sense, but for the 99%, 0 cents. Okay. And there's a lot of lenders right now that are just order takers. You're like, I want 3. Okay, sir. Here's 3. Cool. And then you get your good faith estimate and you go, oh, wait a second. That's 3 points. And they're like, yeah, you wanted 3. Okay, I mean, it takes 40 years for it to make sense, and it's a 30-year loan, but So yeah, you want to make sure the lender you're working with is doing math. So get structured, make sure the lender that you're talking to can actually perform. Do the math to make sure it makes sense. Now, the other place I'm seeing people make a mistake, Oh, hardcore rate shoppers, you know I love you. I have a video that's designed just for you. I actually have two that tells you how to rate shop appropriately. And I have to tell you that people who are not rate shopping appropriately, I'm just not dealing with. And there's a lot of lenders where we're just like, look, we have so many great people that we can work with right now who value our time, value our expertise, value our service level. If you're not even gonna rate shop me right, what is the point of this? You know, and that's why at this point I'm just like, look, bring me the best offer you get, I'll let you know. And I hate doing that because I love to quote. But at the same point, if you're gonna compare something that I quote you the next day with someone else, with something from 3 weeks ago, it's not real. It's not real. It's just, it's garbage, you know? And I don't want to play the garbage game because I mean, look, there's a lot of lenders that are manipulating the garbage game to their advantage, but it's not ethically correct. So you want to make sure that if you are rate shopping, check out that video. I'll probably have a link to it because you don't want to waste your time. You don't want to waste a lender's time, and you want to make sure you actually get a deal. And 9 out of 10 times, like, some of this aggressive rate shopping behavior, you do lose the best lenders because they have enough people that realize that they're good lenders and will take care of them. So they don't want to deal with the drama, you know? So something to consider. Make sure you do the math. Check out the 20-year. If you're not checking out the 20-year, check out the 20-year. 30-year, we're seeing a lot of play on, but it's a really great time to look at refinancing. So while you're stuck in home, hiding from COVID, might as well save some money. So I hope this has been